Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be learning about three different types of accounts or probably the golden rules of accounting, how a journal entry is passed in it and how the accounts are supposed to be classified further. Let's go ahead and understand each of them in detail. So when we speak about golden rules of accounting, we basically have three types of accounting which are required, or three types of accounts which are required to pass any kind of journal entries. These accounts have been mentioned down here. First account is personal account. Second account is nominal account or real account. Now, when we talk about these three kind of accounts, we have different rules for these three kind of accounts. Personal, we have debit the receiver, credit the giver. Second, when we talk about real account, we have debit what comes in, credit what goes out. When we talk about third, that is nominal account, that means debit all expense and loss, credit all incomes and gains. So basically we talk about these three kinds of accounts, and these three kind of accounts further give us what kind of rules that we have to follow and what kind of details we have to mention when we have to pass any kind of journal entry. So we'll further classify these accounts, and these rules itself will define the journal entries that are supposed to be passed. Now when we talk about any kind of transaction, it will have a mixture of both these accounts or all three accounts together. So that means in any kind of transaction you will either have personal account, nominal account mixed together. You will either have real account, nominal account mixed together. You will either have personal and real account mixed together, or you'll have mixture of all these three accounts. So it is not necessary that any kind of transaction will have just personal account, or any kind of transaction will have just real or nominal account. It will have a mixture of all these three accounts in a specific way. So let's further go ahead and discuss each account in detail. The first account that we'll be discussing is personal account. Let's go ahead and understand that part. So the first account that we have to discuss is personal account. Now this has three kind of classification: natural, artificial, representative. The basic rule of this specific account is debit the receiver, credit the giver. Now here we have all accounts which form a part of human accounts itself. For examples, debtors, creditors, they fall under this category. So when we talk about personal account, when we have name of that specific person or the name of the account, that's when we classify that specific account to be falling under personal category. Hence we follow this rule: debit the receiver and credit the giver. Now we have to talk about three different kind of classifications that we have. Here the first thing is natural account. If any account which is related to or directly related to that specific human, that specific account is further classified as natural account. For example, sundry debtors, because we have taken loan or probably we have taken amount or we have given that amount to one specific person, and then they are categorized under one group: sundry debtors. Sundry creditors, we have taken certain loan from certain people, and hence they are classified under one group itself. That's the reason it has been mentioned as natural account. Second is artificial. For example, they are like humans. That means they are not actual humans. However, they have certain activities like human itself. They can perform and act like humans. For example, let's take partnership firm. As you know, all these firms have different entity. They have different entity as compared to the human. So when we talk about managing a company, it is not that the company is getting managed on its own. However, it is still working as a different person altogether, different body altogether. Under law purview, any body or any corporate body has a different entity from the person managing it. That means a company is different and the person who manages it or probably the person who owns it is still different. So if there is any part whereby the company is at fault, that means that specific company is at fault. However, if at any part the person of the company is at fault, then the person is at fault and not the company. Hence we cannot clause or we cannot further go ahead with clashes between either the company and the person who is managing that or who is the owner of this company. That's why they're called as artificial. So here we have partnership firm, Hindu undivided family, etc., who will form a part of these specific classifications. Now the third category that we have is representative, something that we can call as a mixture of natural and artificial both. So when we talk about representative accounts, that means wages outstanding. Wages refer to certain person that we have to give amount, or probably an amount that we have to give to our employees. Now wages itself is an amount that is supposed to be provided. Wages is a representative account. The reason being because wages is artificial, doesn't act like a human. However, it is still supposed to be given to a human. That is the reason it is a mixture of both natural and artificial account. Hence, when we speak about representative accounts, it is a mixture of both natural and artificial account itself. So whenever you have to discuss about personal account, you will have to discuss about all these three kind of classification as well. Now the next account that we have to deal with is real account. Let's further go ahead and discuss what do we have in real accounts here. So the second account that we have to talk about is real account. The rule for this account is debit what comes in, credit what goes out. Now this is very simple for us to understand. All asset and liabilities form a part of real account. Anything that comes in, machinery that comes in, cash that goes out is a part of real account. Any kind of goods, any kind of products that have been sold out, cash comes in, forms a part of real account. Hence, these are amount, or probably these are the accounts that are shown in balance sheet, liability and asset. Mostly liability and assets, because we have majority of things that we procure and majority of thing that goes out only from the assets and liabilities part. Hence, these accounts form a major part of assets and liabilities or balance sheet. Now, the next kind of differentiation that we have to understand here is has been defined follows, or let's go and understand that part which has been mentioned below. Let's understand each and every point that has been written down. We have two further classifications here when it comes to real account. First, tangible account. Second, intangible account. When we talk about tangible account, that basically means we are talking about certain accounts which we can touch, feel, and have a feeling of it. Let's take an example of it, like building account or any kind of plant and machinery that you can actually touch, you can actually feel. On the contrary, when we talk about intangible accounts, we have certain accounts like we cannot feel. However, they are still a part of real accounts because they come in, they go out. Let's take an example like goodwill, patent, copyright. These things you cannot feel them. Can you see goodwill? Can you see patent, copy marks or trademarks? No, you cannot. That's the reason these accounts form a part of intangible real accounts. However, they are still real accounts because goodwill you earn, you get that goodwill inside. Intangible accounts are further mentioned as intangible. The reason being you cannot feel them, you cannot touch them. However, they are still your assets, they are still your liabilities. That's the reason when we talk about real accounts, that means debit what comes in, credit what goes out. We'll have further classification of tangible and intangible accounts as well. So when we talk about real accounts, or when you have to give down short notes of these details, you have to mention these details which are mandatory. Now the last kind of accounts that we have when we have to discuss about the golden rule is nominal account. The most easiest account when we talk about any kind of classification of accounts, or when we talk about golden rules. Let's understand that account now. So the last account that we have is nominal account. This is very simple. Debit all expense and loss, credit all incomes and gains. This is the rule that you have to follow. Repeating that once again. Debit all expense and loss, credit all incomes and gains. Hence, when we talk about expense, loss, incomes and gains, these will form a part of nominal account. Any expense, any loss that you have suffered will go under the debit side. Any income, any gain that you have earned will go on the credit side. Again, to reiterate, these are all temporary accounts. Temporary doesn't mean that it will just be mentioned for the sake of it. However, the balance of these accounts close down completely at the end of every financial year, and these balances are further transferred to trading profit and loss account. So for example, debit all expense and losses, credit all incomes and gains. Sales account will be a part of this. When we talk about expenses, any expenses like commission paid will be a part of this. Commission paid will be settled at the end of financial year, and hence it's a temporary account. That's the reason any account which further goes ahead won't be a part of this specific category, that means nominal account. That's the reason this is called as a temporary account holder. Now, when we have discussed about all three golden rules, that is personal, real, and nominal, to give you a recap, personal will have impersonal accounts. That means when we talk about any kind of natural, artificial, or representative account, will form a part of personal account as well. When we talk about real account, all assets and liabilities will be a part of that specific category. When we talk about expense, loss, incomes, and gains, that will be a part of nominal account. So these are the golden rules that you need to follow. However, before making any kind of journal entries, you have to understand all these golden rules with their specific categorization. So, personal will have debit the receiver, credit the giver if the name is given. Real will have debit what comes in, credit what goes out, and nominal will have debit all expense and loss, credit all incomes and gains. So make sure you understand all these three categories and only then pass the journal entries. So these are the rules that you have to understand at any point of time. Make no mistakes while passing these journal entries, and the first important part is that any transaction or any journal entry you will have to pass will have a mixture of all these three accounts. Not necessarily that any transaction or any event will have just one specific account. For your clarification, it will have a combination of two minimum. So that's what we had to discuss about rules of accounting. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.